Hi guys, what's up? In this video I will talk about measured moves. Uh, when you have a strong breakout in market and slight pullback, you expect that you will see another breakout, which we call it the second leg. You have the first leg like this one, and when you have a slight pullback like this, which it has a slight pullback with small depth, and it's a its pullback, it's not significant, it's more like trading range. It tells you that the bulls they don't have enough strength to reverse the price, so you expect the more it's small and slight, the more the more it's the probable the more possible it is that you see the second leg like this one, and it's usually as big as large as the first one. Let's see, you can use and measure it like this, and as you can see it hit the target. So you see a leg, you see a breakout, we have this level, and you see this breakout below this level, and you go to pullback like this. It happens after this pullback. You see this strong breakout, and then you can decide that you can see and you can say that, okay, I had this big large breakout, I got this leg here and this slight pullback and then this big breakout. So you can enter the position at this bar and put your take profit, put your stop loss. If you enter at this candle, put your stop loss above this level and your take profit here. Even if you enter the position at this point, you still got a good risk to reward ratio, and it happens all the time in different scales. For example, you can consider all of this as one leg, this two leg as one leg, because if you look at it in a higher time frames, it really is. This is your first leg and this is your second leg, and if like this one, if you can't see any second leg, let me put it this way. You got this first leg. Let me get rid of this. Okay, you got your first leg here. That's your first leg, and this is the pullback. By the way, this pullback we have two leg. Between two leg we have this pullback, and in this pullback we have still two leg. Between these two leg we have pullback, and it happens all the time in any scale, as you can see in any time frame. You can see it. It's crazy. Okay. I'm sorry, I made a mistake. Okay, If you consider these two legs as a one leg, so you expect to see the second leg after pullback as long as this, as large as this one, but it is not. It is not. It's not even close. So what happens if it doesn't reach the target? It doesn't hit the target. We should change the scenario. Scenario changes. There's two scenario for this. Either it turns, it becomes a trading range, or it reverse. It become reversal. Okay, so there's a two scenario for this. If you can see the second leg as large as the first one. In this scenario, we have a trading range. What about trading range? We always talk about trading range as the area, okay, buy low, sell high, but what if we see a breakout above this or below this trading range? Okay, I tell you what kind of target, how large, how much target should I consider for this? Okay, consider this. You copy this one, the height of this trading range is usually the target you determine for it, and the target the people determine for it. And just because people believe that after breakout from this channel or trading range, you expect to see a target as large as the height of this trading range, they do it. That's simple. It's not complicated. Why we believe money? Because other people does. They do. They believe the money, so it's valuable. That's it. That's the only reason we can use money, and because we all accept it as a valuable thing. It used to be some gold in treasure in the bank, but it doesn't anymore. There's no backup for it. They just print money and print it, and that's it. Nowadays you don't see it anymore. You know, we used to in past we could see it as a physical and intangible asset, as a paper or coin, but now it's just a number in your card, your banking card, your credit card, your whatever. You don't see it anymore. Just like cryptocurrency, you don't see it. It's not tangible. Okay, anyway. So it is your target. Sometimes it doesn't happen, especially when you have this large, big. You know, you have to consider the context of the market. You know, and you had this trading range. You had this downtrend and breakout above this downtrend. So you have to see the pullback. In the next video, I will talk about pullbacks. But let's continue our discussion on measure moves. Okay, this measure moves, they're not as cute as this one. Sometimes it's something like this. Okay, you have the first leg here. You can also draw it and determine it like this. Let me erase this moving averages. I don't want you confused. So this is your first leg, for example, and this, let me see. Okay, you get your target. You don't get your target till here. That's funny. And the interesting point is if you put your stop loss right here, sorry, the stop loss here at above this, and you enter the position after you see breakout. So you can get your target here. If you don't manipulate it, if you don't do anything with it and let it leave it alone, yeah, it will you hit your target after say 55 days, which is kind of you know, it's hard for people to leave their position alone. But for those who work in long term, yeah, it makes sense. What about this one? If I consider this one as a leg, what will happen? Okay, this is your first, and unfortunately it wouldn't hit your target, and you can see a reversal here. If you consider this one as your trend line, here you have a reversal. I mentioned that before. If it won't, if it doesn't hit the target, it's either it become a trading range or reversal. What about this one? Yes, it's obvious we have this leg and second leg, but I want to consider this big boy, this and this. Let's see. Sorry. As you can see, it didn't hit the target. It's like 60 or 70% of the first one, its height. Okay, I think I made a mistake again. Okay, let's do it. Yeah, it did happen. I assume. Let me show it with this line. Yeah, it definitely happened here. You can see it. This is your first leg hand. this one your second leg. So you have the market. Let's consider this, that you don't have you're at this point and you don't have the rest of the market, you don't have the right side, you're just here. You had these legs, the first leg and this pullback. Okay, if you wanna enter the position, say here, after you see breakout, you can enter the position and consider your target at this level. Why is that? Some people say, okay, we had this support resistance level here, so I want to put my target at this point. Oh, but we have price lower, you know, it moves lower than this and it crossed it, and that people say, okay, it was the area boundary. It's true, but some other people say, okay, it was a measured move target and we had this first leg and second leg. Other people would say, no, we had this first leg and second leg here. All of this speculations are and claims are true. And you can also consider this as the first leg and this one as the second leg. Let's see if it happened or not. Because I see a reversal here. Makes me wonder. No, it didn't happen. So we have this reversal. I told you it's two possibility. If it doesn't hit the target, we also have another other kind of measure moves. We can use the first leg, like this one we just talked about, as the target, but also you can use breakouts, the height of the breakouts, the height of the exhaustion gaps or measuring gaps as the target. For example, we have this exhaustion gap here. Let me measure this. Okay, and all you have to do is just copy this, shit, so we can have the target. Okay, so you can have the both. Let me show it in lower time frame. Yeah, as you can see, exactly here we have this pullback, the first leg and the second leg. That's shocking. And if you draw this vertical lines, you have better insight. You can see here the pullback, this one your first leg and this your second leg. Interesting. Let's consider this one. Here we have this motherfucker. You can call it measuring gap, or you can call it pull, breakout, whatever. You have a breakout because here you had a resistance, so it's a breakout candle. And let's put it this level, and you can see after this breakout, you can see it hit the target. That's cool. So you had this first leg. After the traders, they think to themselves that okay, we had this badass breakout, so it's we can expect another leg. Why not? If it could make such a badass breakout, so you can expect other one and another one. Let me give you more examples. What about this Michelin gap? Sorry, exhaustion gap. Or you can call it climax, whatever. It's cool. Copy it. And yeah. And it hit the target after all. And you can see you have these reactions at these levels between these two legs, and if you put your and you can have both of these legs. The benefit of this analysis is this strategy is we can have understanding that where you should put your target. Okay, you enter the position after the signal bar at this entry bar, but where should you take your profit? Where is the exact point where other traders, institutions, they take the profit? Okay, you can see it's here. It's the first leg, and this one your second leg, or this one, because this is the leg which hit the target. Okay. Other examples can consider this one. If you just consider this candle, not this, you can see that it hit the target. See? So it's your first leg, and this your second. This is your pull. And if you see the pullback in lower time frames, you can see that that pullback is have two legs inside it, and that's really interesting. This one. So it's not that complicated. When you have a strong breakout, you can expect that it will continue after the pullback. So pullback can't stop it, especially when you have a strong when you have a big pullback. It's not strong. Okay, this candle here, could it be a level for you here to take your target? Consider this one, but it didn't form the second leg here, just have it here, this. And this one didn't happen. If you consider this one as the first leg, your second leg would hit the target. You could take your profit at this point, because at this point you could take profit, and your target, your stop loss wouldn't touch. So what about this one? Try to practice this shit, and that's why it took this much while. This video took us long, because it's an important subject and you have to learn it. Okay, if you consider this one as your leg, the minimum target is as large as the first leg. Here you have this breakout, strong breakout, and after this breakout, traders, they expect to see another leg after pullback, but it didn't happen, and you have this kind of a trading range here. Okay guys, I think it's enough for now. I hope you enjoyed this video. We have another one here. You can always anyway, you can see it anywhere as candles and as waves. You can see it in different forms. And okay, I hope you enjoyed this video. If you have any suggestion, if you have any critics and criticize me, I'm cool with that. Just share it with me, and I don't give a shit, but yeah, I would be happy if I see your opinion. Okay, let's finish the video. This one, holy fucking shit. Yeah, hit the target. So we have this strong bars with strong bodies and small shadows, tails, and after this after this pullback, which you can see there's a lot of tails below it, you can expect to see another leg, which by the way it's inside the trading range, so it's not far beyond the mind if you consider another leg. And if these patterns, you find them in a trading range, it's more easier, because for example you see a reversal pattern at the bottom of the trading range or at the top, so it's more likely if you see a breakout and reversal pattern. Some people say this reversals they all happen at support resistance areas. Okay, I will talk about support resistance areas in next video. but now take care.